Increases in prices are likely to have only transitory effects on inflation.
Economists call all these things transitory effects.
We've had several months of high inflation that most economists, including me, believe will be transitory.
We don't expect that that upward pressure will produce substantially higher prices or that the effects will be persistent. We expect that they'll be transitory or temporary.
Yes, they all got it wrong. Biden administration officials failing to respond to rising inflation back in 2021, and the American people have not forgotten. A new Gallup poll finds public confidence in President Biden, Treasury Secretary Janet Yellen, and Federal Reserve Chairman Jay Powell plummeting. Look at these numbers. When it comes to doing the right thing for the economy, only 35% say they have great deal or fair amount of confidence in President Biden. 37% for Janet Yellen and 36% for Jay Powell. These are not good numbers, Cherise.
Yeah, I mean, look, the American people see this, too, every day. Ever since the beginning of the Biden administration, we have seen inflation. We've seen, there's people wandering around the streets. They say they don't have jobs. There's all these jobs available. The egg prices are through the roof. Milk's through the roof. So, they see all of this happening. And then they turn to the leadership of the country, and they're hearing transitory. And Americans are like, what does that even mean?
Right.
And did they all sit around in a circle around a fire or something and say, what word do we want to choose for the day? Is it transitory?
Yeah. Look at that inflation timeline again. Brenda, we are obviously off of the highs of inflation. It was all the way up at 9.1%, as you can see, back in June of 2022. And now we're at 5%. But even the idea that the Fed has a target of 2% is like not even sensical, because how are you going to get to 2% from 5% in just a couple of months?
And we're just not. And the payrolls numbers last week, again, I mentioned this, are going to not allow us to get there. You have unemployment at 3.4%. That's the lowest it's been since the 1960s. You have wage growth. You have all these things that are going to keep inflation higher.
Yeah, but layer on the banking sector, okay? And then you've got this credit tightening underway that people need credit, access to capital. They can't get it.
Right. And speaking about confidence, when I think about confidence right now, it is in the context of this banking crisis.
Yeah.
The regulators, the policymakers have not been able to quell the confidence. And look, what we've seen is this negative feedback loop. You see pressure on stock prices, which leads to concerns about deposit flows, which leads to concerns about bank runs, more pressure on those stock prices. So we really need to fix that crisis of confidence.
And that's
the regulators need to step in here.
That's the word, confidence, Adam. Once confidence is broken, it's over. Will there ever be a return in confidence to people like President Biden? Are we ever really going to believe that he understands reckless spending did, in fact, lead to 40-year high inflation?
In his case, no. He will never, President Biden will never comprehend that you can't just spend your way out of a problem or that somehow that is irresponsible. What I wish we could get back to is a kind of, and forgive me because it sounds so gauzy and so lovely, but it was lovely when Ronald Reagan was in office, because he was firm. He knew what he had to do when inflation was 16%, and that was get it down. He was a straight talker. He was also a compassionate man. And I feel like we've somehow we've lost. I feel like Washington has lost its sense of balance. It's become so partisan, and labels are thrown around so carelessly and callously. All we really need to get back to is just some good, sound leadership.
Well, that's right. I mean, look at James Freeman's op-ed in the Journal this week, Biden's ridiculous line in the sand. Do we really want to play politics right now about the debt ceiling?
No,
why can't you just come to the table, have a conversation about what makes sense in terms of spending limitations, and raise the debt ceiling? Why must we all wonder if the United States is going to default? How ridiculous is this?
Yeah, there have been 74 debt increases since 1960, and there have been zero. I'll say it again. There have been zero. What am I even trying to say? I can't even say. There have been zero defaults since 1776.
Yeah.
So the notion that somehow we're going to default, honestly, it's the craziest thing. We need to get our house in order. I've got two numbers for you, Maria. If you look at tax receipts for the federal government year to date, they are down 10%. Spending, however, is up 12%.
Unbelievable.
You can't increase your spending if you lower or decrease the amount of money you're bringing through the door.
And yet, what do we hear from the commander-in-chief? All of the ideas to limit spending are wacko. They're MAGA. They're extreme. What's extreme about having your financial house in order?
Yeah, I mean, well, speaking of house and order, a lot of people are actually looking at the interest rates on their homes as
That's
well.
right.
This is something that, again, they're constantly looking at their monthly bills and what exactly they have to pay out.
Oh, it's a great point. Interest on the national debt. Mike Lee, Senator Mike Lee from Utah tweeted this. Interest on the national debt is up 40%, $107 billion. It's already $374 billion for the first 7 months of this year.
Yeah.
Wow. Okay, that's what happens when you go from 0 in 15 years to 500 basis points up in a hurry.
Right, in
less than a
13
year.
months.
Yeah.
I actually want to make one more comment here about the fear-mongering around the debt ceiling. Listen, we know it's going to be noisy, but there are some people that are drawing an analogy to what happened in 2011 when markets were down 20%,
that's right.
when the U.S. credit was affected. This is not the same thing. In hindsight, we know a lot of that noise was due to the Eurozone crisis gaining momentum. Look at what the markets are telling us. Again, the VIX is at 17. The S&P is up. There's a little bit of stress in the early part, in the short end of that curve. That's what we're continuing to watch, but I'm completely in agreement with you here.
So you don't think that the U.S. debt gets downgraded by the ratings agencies?
No, I do not.
Okay.
And by the way, remember when that did happen? I think it was back in either 2011 or 2012, coming out of the debt crisis. S&P cut the debt of the U.S. on a Friday afternoon.
Oh, that's right.
Like nobody's going to notice.
That. Yeah.
Right?
Yeah.
And the markets went down Monday morning for an hour, and then we said, really, let's just work through
Move
this.
on. Work
That's
through
where
it.
we're
All
at.
right. We will take a short break.